Joining us live today on Power Lunch is Honorable Francis Katare, CEO of Rwanda Mines, Petroleum and Gas Board, for more on this. But before we get into this, good morning to you.
Good morning to you, Michael.
It's been rather a long time that we haven't spoken.
Pleasure.
But since we know that the Rwanda Mines Board, of course, announcing that the country will host the first ever blockchain project, tell me, when should we expect this to come into play?
So blockchain technology, Michael, has been known for several years now to have incredible potential for transparency in transactions. And the mineral sector is one such sector that was bound to benefit from this. And so we've been looking at it closely for quite some time. So fortunately, we have a company here in Rwanda, PRG, that is investing in Tantalum refinery, but also in mining operations. That has brought this company called Circular that they have been working on in developing in-house technologies for traceability of mineral commodities. So during this Tantalum General Assembly that has been taking place in Rwanda, we had a chance to sit down with them and review their technology and see the solution that they are promising. It does look actually pretty good, and we are excited about the potential that it holds, especially for reducing costs that we have been used to for this particular service.
Francis, excitement is one thing, but also implementation and the operability is another. Talk to me more about how operable do you see this blockchain actually delivering on all of these targets that Rwanda has with the mining industry?
So for the last 8 years, we've been implementing a mineral traceability program that has delivered, and it has delivered goods to the market. It has given us an opportunity to debunk the narrative about conflict minerals from this region, especially from Rwanda. And so because we have been implementing this system over 8 years, Rwanda had become 100% compliant and established its credibility in the global mining space. And so now the issue that we are confronted with is to see how to integrate efficiency, effectiveness, and technology in this program. It's what this new company is promising to deliver.
You're talking about that, and that brings me back to a new law that we saw come into play in August 2018. That's about 2 good months ago. Tell me, what are we seeing this bringing into the mining industry for Rwanda?
So the new mining code that has been gazetted 2 months ago is embedded into a new policy framework that we've been reviewing, which is basically about 3 things. One is we've been looking at what is happening around the world, and especially in Africa, around the Africa mining vision, which the African heads of states adopted in 2009, but had not yet been implemented across the continent. So we looked at some of the principles that are actually best practices, and so how we can integrate it into our mining policy. And secondly, we looked at our own mining sector, how it's been performing, some of the gaps that we have that we need to address, and so that we needed to not only address the policy issues, but integrate it into a regulatory framework, particularly the law. And so we have enacted now a new law that makes Rwanda's mining sector competitive, that raises the standards for compliance with standards, but most importantly, brings opportunities for investments into the sector.
We know that African governments and, of course, leaders are demanding more from the mining sector. We've seen them pushing for a revising, for Congo, Democratic Republic of Congo, to revise their mining code. I think that came into power, I think in 2002, if I'm not mistaken. And we're seeing the East African Community Parliament coming up with new laws. Rwanda is bringing up new laws. Tanzania is bringing up new laws. Tell me, what has not been happening? What has not been working in the mining industry, and how do we see these changes bringing up a new shift in the paradigm?
So there are 3 things that are happening in the mining sector across the continent. One is, for many countries, well, let's say, for those countries that have very dominant mineral products that take up a large chunk of their economy, there have always been complaints from these wider communities on how resources coming out of the mining sector are distributed, the priorities on how these resources are spent, and most importantly, on how the revenues are invested for the long-term sustainability of the economy. And so some of the changes are geared towards addressing that issue. The second issue, which appears to be the most common across the continent, is for the economies that have mining sectors with non-dominant minerals are looking at how to address the deficits, which are like this. Some countries have got dominant foreign companies that often have not had put in place a mechanism for downstream processing as well as linkages with the rest of the economy. And some countries are trying to resolve that issue by creating a regulatory framework that incentivizes large multinational corporations to work with domestic companies and thus have mining integrated into the local economy. There are several countries, including our own country, Rwanda, where our mining sector has not benefited sufficiently from international investment, particularly because little exploration had been going on. And so many of these countries, like Rwanda in particular, were creating a regulatory framework that will incentivize, create opportunities for exploration, for collection of geoinformation data that can then become a basis for attracting international investments that will transform the mining sector. And we are bound to see a vibrant mining sector on the continent that will deliver on the promise of the Africa mining vision that goes like this, that our natural resources should be the foundation for industrializing our continent.
Francis, I have about a minute to let you go, but you've spoken about, exploration of gas, and we know that after hydroelectric, we're looking at a methane that is contributing about 24+% to Rwanda's electricity and off-grid. But now let's move away from that and look at beneficiation. Of course, we know that about 70% of Rwanda's mining is artisanal mining, and we lose a lot down at the value chain. When we look at economic value and value addition to ore, just about the other day I was reading about the new tin smelter investor in the Karuruma tin smelting factory. Tell me, what more are we looking at? Are we yet to see more investors in smelting in Rwanda instead of just putting ores on the market, but we smelt them ourselves?
Absolutely. So we see beneficiation and value addition starting from the mine site itself.
All right.
To address exactly the kind of issues you are raising about productivity of mining operations. Where artisanal mining practices continue to dominate the sector, including in Rwanda, we see large inefficiencies because of poor technology integrated into this. And so beneficiation for us starts at that level to increase the recovery rate so that we get as much mineral content from the material that is extracted from the ground. And as more material content is processed, then we advocate and incentivize investments into value addition, which means raising the concentration of the mineral and then processing it into final products. And that's where the smelting refinery come in. And